U.S. stocks suffered steep losses on Monday, with all three of Wall Street's main indexes falling more than 2%. President Donald Trump ramped up his criticism of Federal Reserve Chair Jerome Powell, calling him a loser and demanding he lower interest rates. Yields on the 10-year Treasury note rose and the U.S. dollar slumped. Trump's attacks were the latest to rattle investors who have for months grappled with the president's ongoing erratic trade policy. Brian Krauez is president and lead portfolio manager at Scharf Investments.
It's a very, very chaotic situation for investors. It's hard as a professional even to sort of manage money through it. What I would tell, individual investors is you can't just hide in cash, because actually U.S. cash is the thing that's potentially under attack. And so you've got to stay invested, but you want to be diversified.
Among individual stocks, AI heavyweight Nvidia dropped 4.5% after Reuters reported that Huawei Technologies plan to begin mass shipments of an advanced AI chip to customers in China as early as next month. Shares of Tesla dropped roughly 6% a day ahead of its first quarter earnings results, and after Reuters reported that the production launch of its stripped-down version of the Model Y was delayed. Other notable earnings this week include fellow Magnificent Seven member Alphabet, along with high-profile industrials Boeing and 3M. Analysts expect aggregate first-quarter S&P 500 earnings growth of 8.1% year-over-year, down from the 12.2% growth projected at the beginning of the quarter, according to LSEG.
These threats of firing Jay Powell are really concerning to investors for a number of reasons. One of the things is you already have real big policy uncertainty from tariffs, and tariffs are really an undoing of the world order, where the U.S. had massive trade deficits and massive inflows of capital. So tariffs already are sort of throwing everybody for a loop. And then threats of firing Jay Powell is another massive change. As a potential foreign investor in U.S. bonds, you're looking for the safety and security of the U.S. dollar. If politics starts getting into monetary policy, you now, as a foreign investor, even a U.S. domestic investor, can't necessarily trust that your interest as a bondholder will be respected. And so that's a potential risk for the dollar and a potential risk for interest rates. All of this feeds into fears within the stock market as well, because everything levers off of the U.S. Treasury. You're seeing rates tick up here, even with a risk-off market. So this is a really big problem. Hopefully, it's just noise. I think most investors are assuming Jay Powell will fill out his term, but it's clearly upping the potential risk for investors in U.S. assets, both stocks and bonds.